Good afternoon. How's everybody doing today? We got a little special edition of Wall Street X's and O's. Today is Friday, July 30th. Next week, I am going to be out of town, getting ready to move my daughter into a new place. So I figured I would kick out a new one today and skip next week, and we'll be back on an every 2-week type of basis. But anyway, I hope everyone's doing good. Loving the heat, right? Not. I don't like heat. Ever since I had COVID, my body hates heat. So I'm ready for some cold. I'm ready for snow of all things. So I am excited to go skiing, being ski season kind of got cut short last year. But anyway, to kick things off here, the content that is presented on this show is for informational purposes only. None of the information contained constitute an offer to buy or sell any investment. It is not a solicitation to offer or buy any security, and it does not constitute investment recommendations, legal, tax, or accounting advice, or investment advice based on anyone's particular investment and financial situation. That's the disclosures for you. So, investments can and will lose money. They are not FDIC insured. And without further ado, we're going to kick this thing off. I got actually a good show today. You know, I've skipped to every 2 weeks from a content standpoint, but I got some good stuff. My first two are kind of normal things. The third one is a doozy. I'm fired up. I am really fired up. First of all, I'm going to kick it off with a Fed update. Jay Powell spoke this week, so we're going to talk about that briefly. We're going to talk about the economy and its continued pandemic recovery and what's going on there. Is this new rise in cases, and that's not really just the U.S. I think the U.S. is just kind of getting started here on the short run. It's kind of a global thing, and it's not an emphasis on COVID and what's happening. It's the economic impacts of this. And this is really kind of a third wave if you really go back and you graph it out. And then the third one, and the doozy of the day, it's called the Cantillon effect. Ooh, yes, this is a good one. Anyway, Jay Powell, big speech this week. And he came and said, we're not changing anything. They're staying with their continued purchase. Do you know that they're buying, our government is buying $120 billion of their government securities on a monthly basis. And they said that they are going to continue that until substantial further progress has been made toward its goals. What does that mean? Flip if I know. I don't know. All I know is that they need to taper. Okay, what does taper mean? It means that the Fed is going to begin to reduce what they are purchasing. It doesn't mean a balance sheet reduction, which means all of the stuff that they own on the U.S. government's balance sheet, they begin to sell and reduce the balance sheet. No, a taper means they're going to slow down their purchasing. So, you know, basically, we're in a mode right now of they're just spending money. You know what? Spend it, spend it, spend it. It's like feeding the ducks at City Park Lake. You better have a full bag of bread because they're coming for you. That's what our government's doing. They got a full bag of bread, and this bread never runs out. It's kind of like what Jesus did, feeding the 5,000 on a couple loaves of bread and a couple of fish, and he fed everybody. That is the federal government. Like that, I bring in a little biblical history there. You know, this is Kreger at his best right now. At his best, I'm telling you. I'm a little fatigued on the day, but you know what? It's a good day still. Moving on, let's talk about the recovery. We've had a lot of new numbers come in here. Q2, we're in the midst of Q2 earnings. They've been off the charts for the most part, although Amazon came out and didn't hit numbers and reduced third quarter on. Apple did the same. Apple killed it for Q2, but then they showed they're kind of lessening their expectations for Q3, which is kind of interesting. Essentially what my thoughts are, based on what the data is showing now, and you know I'm a big data guy, but I focus on the rate of change, on how things are accelerating and decelerating and at what pace. You know, it's like when you drive your car and when you press down on the accelerator, you accelerate it different ways. Am I stomping on it or am I gradually doing it? That's how you have to look at the numbers, which then begins to give you an idea of what's happening. Right now, what I'm seeing is a global slowdown in Q3. In the US, we're already starting to see it. Okay, I told you we're going to have a big number, which we printed a big number. I then said that things are going to start to come off in the third and the fourth quarter onwards. And what that is going to look like, I don't know, but that is what the data is starting to tip its hand or its hat with, is that things are starting to decelerate. Okay, what is not is inflation. Inflation remains sticky. I had to laugh at Jay Powell's comment, and I have to find the little deal here. For those of you joining the first time, which there probably aren't very many of you, this show is uncut and unedited, and I kind of flip around and I have all my stuff on my screen here, and I try to act professional and like I have it together, and I really don't, but I have a good time doing this. Here's the thing. Powell replaced his verbiage of transitory, which means temporary, with temporary. If I had more energy, I would comment on that, but I just don't. So that's kind of the extent of this. What I'm really focusing again is I've said all along, I've said in my monthly and my quarterly write-ups, that I think the biggest risk to the global economy and the U.S. economy still is COVID. Love it or not making it a political thing, whether you believe in it or not, that is not relevant. What I'm saying is that there is something that has the ability to impact the economy, and we've already seen that. We're seeing cases rise once again, where I talk in third wave, where I went back here, and this is a live update from, what is this stinking website called? Worldometer Info. Whatever the heck that is. But anyway, we hit a high back when things were really ugly, back at the end of April, June, of over 800,000 new cases a day. As of this last week, 7-day effective average is 600,000, which is inching up there. Deaths top 10,000. Okay, so you're starting to see things pick up. Some positives. Okay. India and Brazil, we're seeing finally declines. They've really had an implosion. They're coming off. Why is that important? They're two of the bigger countries from an economic standpoint. So that is really going to help the global economy continuing to push on. See, there's my tie-in. On the other hand, what I'm really interested in watch is the UK. The UK went super aggressive on two things: lockdown and vaccinations, and they are like one of the leaders globally on the number of people, or a percent of their population vaccinated. Here's what's interesting. They have flat out opened up. They went from, if you go out of your house, we're going to shoot you, to now let's open this thing up, let's party in the streets, right? Here's what's going to be interesting. With high vaccination levels, it's going to be interesting to see how Delta variant continues to be passed around UK. It's going to be really fascinating to watch. It's a numerical Olympics that's taking on, like how I even brought in the Olympic deal. See, I told you I was on fire today. I didn't drink water after that one. That's like running at 400 meters and you're like going, whew, that was good. So I'm really curious to watch how that is handled. Obviously things here in the US, in those populated areas or states or communities that have low vaccination rates, that's where we're seeing some things pick up. Again, what does that look like? I don't know, but what I'm watching for is the economic impact. Okay, because if you have economic expanding and now being forced to contract again, that impacts the economy, which impacts the stock market, which impacts our investments. That's what the focus is on. Okay, it's not getting all this other political or fake news or all the crap that's out there, which there's so much crap. If you could see my eyes, they're almost brown. My eyes are really blue, but with all the stuff floating around there, there's probably brown specks floating around there. There's so much stuff. We're knee deep in it, people. And the key is looking at the data for the truth, first of all, but then what is its impact? What's the impact of the truth? So I'm really excited to watch how this is going to continue to develop. Okay, if you really look at it, GDP for the month came in at an annualized rate of 6.5%, which is exceptionally good for Q2. It's the fastest pace since Q3 of 2003, which is economic growth. That's the growth. That's the engine. It's growing, and how fast is it growing? Okay, the problem is they came short of consensus. So they were expecting 8.5, and we only came in at 6.5. What held that back? Well, housing inventories, because if you think about it, you have lots of people want to buy homes. If there's not enough homes to buy, there's not enough homes to buy. That slows things down. You look at inventories. I was in Lowe's trying to buy sprinkler heads for my sprinkler system, which I had sprinkler leak, and I had to fix it because that's just the way I am. If I can fix it, I'm too damn cheap to pay for it. And I was shocked at all the empty shelves just in the sprinkler section. And that goes for lots of places. Another area was net exports were huge and really also subtracted from our growth. That means because we're not making anything to ship it out, so it really looks bad. So these are things that as time goes impact the economy, and those are things that I'm watching, because how that goes then dictates how we allocate our funds and where we place our funds, where we pull our funds. Okay, right now I'm really gearing up for stagflation. That means growth decelerating, a deceleration or a decline in growth, and a continued acceleration or a maintaining of high or higher inflationary levels is what I'm positioned for. So our whole portfolio is beginning to shift there. You're going to see another shift here probably in about a week, where we're adding more focus on large cap, more focus on large cap growth and tech. We're going to get on the defensive side, adding some dividend stuff, which we've owned. We're just increasing that. We've eliminated small cap altogether. That got banged last week. I took it out behind the shed, bang, shot it, cut its head off like in the old days in the chickens where you snap their heads off. That's what kind of happened with small caps. Why? Small caps is a significant underperformer during economic environments such as stagflationary environments. So we're preparing, we're trying to get positioned, and we're not guessing. Okay. Onward. This is the best one of the day. This is so good. I got to take a deep breath and get really focused on this. I would argue most people have not heard from this. I had not, or if I did, I wasn't sure, which probably means I had not. But I might have. I'm not sure though. See how I am on Friday afternoon? I kind of talk in circles some days. There's a gentleman by the name of Richard Cantillon. He was a successful Irish-French merchant and banker. Just my mere descriptive term of him being a merchant should give you some ideas that this gentleman was in the past. This is a historical figure. Okay, he lived from 1680 to 1734. He was literally arguably the first economist. Okay, very successful guy. In 1730, he wrote a paper entitled the essay on the nature of trade in general, or what has become to be known as the Cantillon effect. Basically, he describes this. It's a process in which printed money, now keep in mind, this is 1730, not 2021. Okay, this is 250 stinking years ago, and he talks about the process by which printed money is circulated into the economy, and he argued that when money is printed, okay, that means they're creating and printing more money and putting it into the economy to stimulate the economy, that the circulation of the new money is not neutral. What are we thinking? What is the spin from our government? And I'm being politically agnostic right now. The spin on our government is anytime they're doing any type of stimulus, what is the focal point? The focal point is on those that have not the haves, the have-nots. Would you agree? That is 100% correct. Okay, if there's anyone that disagrees with me, call me and I'll freaking argue that with you all damn day. Okay, the whole focus is on the have-nots. I'm good with that. Okay, I'm fortunate and blessed. There are a lot of people that aren't and have bad luck, make bad decisions, have all sorts of crap in their life that prevents them from being successful. I want to help those people. We should. Okay, not to get off base here. But anyway, He says it's not a fair or even distribution. Rather, he says in Cantillion's day, your personal benefit from money printing depended on how close you were to the king. Fascinating, right? The closer you were, the greater the benefit. The further away, the greater the harm. Yeah, this was written in 1730. Let me remind you of that. Okay. To illustrate, he uses the metaphor of water versus honey. He says when water is poured into a glass, it distributes evenly almost instantaneously. However, when honey is poured into the same glass, it begins by accumulating in the center, and then it slowly spreads out. Science project. Try it, watch it. That's what happens. Water in a glass equally spreads out through the glass. Put a couple drops of honey in, it starts in the middle and it kind of floats, and then it slowly spreads out in the glass. Such is the transmission mechanism of money printing. Okay, when money is printing, the first thing that happens is asset prices rise. That's the first thing he mentioned. You know that this happens very quickly and has to do with the excess money being concentrated among the wealthy, suddenly chasing after fixed supply of assets like stocks and land. Sure this wasn't written in 2021? No, 17-30, okay? I love this. This is fantastic. He said he went on to observe that after prices of assets have risen substantially, money then begin to spread out across the economy like the honey slowly dispersing out through the glass of water. The process thus creates a broad-based price inflation. That's what's happening now. This is not transitory. This is not temporary. That is the BS that's being preached on the news. And you know me, I am zero BS. Zero. My BS meter right now, if this is zero, it sticks there. I don't care how I'm feeling. My BS meter is at zero. Yours should be too. Okay? Now, he says when observed after prices have risen substantially, money begins to spread out across the economy. Okay, it's like the honey deal. All right, this creates the broad-based inflation. I'm going to reiterate that because that's an important point. Now, just over 1 year removed from the start of Operation Warp Speed, that's Trump's deal on trying to find a problem or a vaccine. He says we've begun to see meaningful acceleration of reported inflation. These are our numbers. Headline CPI, which is inflation, just hit 5.4%, the fastest growth rate since 2008. Core CPI just hit 4.5% year over year, the fastest price growth since 1991. CPI in energy increased by 24%, 24.2 to be specific year over year. That's the fastest price growth since 2008. Finally, Cantillon observed that after both asset prices have risen significantly and broad-based inflation has taken hold, that's when laborers see wages rise. It's a delayed effect, okay? You have prices going up, you have inflation going up, and all of a sudden wages then begin to rise after the fact. However, here's the kicker. Wages do not rise at the same magnitude as the asset price growth or broader inflation. Let that sink in. Here's what happens. Money printing, passing it out. Okay, disperses, disseminates through your people. Inflation goes up. Prices go up, inflation go up. Paychecks go up later, but not at the same rate. Can you start doing the math? Yeah. What happens is prices up here, paycheck down here. That's a problem. Who in the end gets smoked? The have-nots. That's a fact. You can go back through time to 1730 when he wrote this stinking paper, and you can see that happen over and over and over. So the dynamic effect, what it does is it creates wealth disparity. That's what's hilarious. You have our politicians talking about, we want equal wages. That's bullshit. Sorry, yes, I said it. I'm a little pissed because I get angry at what happens on the news. Here is the garbage, okay? They're creating this, we care about you, and they are screwing you. all in the same breath. Isn't that fantastic? Yeah, I hope you get fired up like I do and you start looking at both political parties going, what are you doing? Are you really helping people? Are you really doing what's in the best interest of the United States of America? You know what? I really question that. And like I said, grew up Republican, conservative. You know what? I don't aspire to any party right now. They both tick me off, and I'm just not happy with it because I don't see them doing the things that fundamentally need to be done in order for this country to start turning around and getting back on firm footing. And I could go off on that for a long damn time, and you don't want to hear it. So anyway, with that said, I'm going to end on the Cantillon effect. It's real, people. It's live. It's happening right now. You are seeing it happen again, and I want your eyes to be open to watch it. Okay, start listening to what is being said, but then watch the numbers as they come out. Watch what's happening. Look at unemployment. Unemployment is still a problem. Okay, there are lots of people still receiving funds from the government, and now we're potentially going into another period where we could see some contraction due to the pandemic coming back again, a resurgence. I'm not saying it's going nuts, but you could see things contract again. That has an economic impact, which then what's the government going to do? Feed the ducks. July 30th, this is a good one. Fire this one to your friends. I'm entertaining today. I'm not feeling it, but I'm feeling it. This is good stuff. I want you to be educated, okay? Don't be like you're just, like the little kids going in the museum. Now hold hands so no one gets lost and you walk around and they could be leading you into the trash compactor, okay? Don't be one of those little dumb kids, all right? I want you to be educated. I want you to be aware. And I want you then to use your voice to educate other people. Because at the end of the day, that's what it's about. It's not listening to the junk, because there's plenty of it, all right? Let's talk facts. Let's talk what's happening, and let's be real. All right, people? I love you guys. So again, for June 30th, for July 30th, 2021, this is Craig Modelmog with Wall Street X's and O's. Thank you for joining me. So I went 22 minutes. I get fired up and I start spitting. My screen's like covered in spit right now because I get all fired up. But anyway, you all have a great weekend. Be safe. And I look forward to speaking with you all soon. So I am